Hey guys, just let me adjust this thing so my question bar is bigger. Okay, let's begin. Introduction to FX trading, right? So today, what we're gonna look at, the introduction to FX trading, all right? Agenda for today, right? We're gonna talk really quickly, what is Forex and how does it work? Then we're gonna tackle the really tricky questions on leverage. How much leverage should I start with? What are some Forex jargons I should know about? And then I'll address the questions that many people have on, especially on like how much time do I need to trade Forex? How much knowledge do I need to trade? And what is the MT4 trading platform? Okay, so of course, important disclaimer for you guys to know, CFDs, complex instruments, they are risky, but always remember that whatever you're receiving and learning from this webinar today does not constitute as trading advice. So please always do your own due diligence. Do your own due diligence before trading, right? Rebecca, I can see that you cannot type into the comment section. I believe it's disabled, but I can see your questions. So that is fine, right? Anytime you have questions, just ping me and just type it through exactly where you're typing it, and I will be able to answer you. Okay, now moving on. Yeah, well, that is me. A rather flattering picture of me back before circuit breaker started, when I had a little bit more time to exercise, I guess. But yeah, so anyway, a little bit about me. I run the award-winning research firm Everest Fortune Group, and some of you guys might have seen the Forex Army, which I also run. Right, we are finalists for 2019 and 2020 for Best FX Research and Best Equity Research. My team comprises CFA, CMT, CFTE accredited traders. Means basically, we kind of know our stuff, right? And we regularly advise banks, brokers, hedge funds, and at the Forex Army, we over the course of this webinar series, I'll be showing you some of the really awesome indicators and EAs that we've built. I'm also a market analyst over here at Axi. So you've seen the analysis we put out, the Insta story, the Instagram posts. Some of you might have seen my cat on the Insta stories, right? Yeah, it's my cat's my biggest advisor on how to trade the markets. Anyway, moving on from there, right? Let's dive into the first question. What is Forex and how does it work? Now, many of you guys, right, when you look at Forex, you land on any broker website, or you're trying to understand what Forex is, you come in and you look at this table, right? This table, it shows you stuff over here like, euro dollar, pound dollar, Aussie. It can be quite confusing. You see the numbers, and you're like, what is the difference between what I'm guessing this is standard and this is pro? What's the difference between this? And you're like, so I know people make money in Forex, but I don't really understand the how it really works. I know you buy low, sell high, buy low, right? But to give you a full appreciation of how Forex works, right? I just want to take you to this picture here and help you understand that Forex actually is basically at its core what we do very often, changing money when we want to go on holidays. Well, during this period, during this whole COVID period, we might not have been able to do this too often, but I'm pretty sure at one time or another in our lives, we would have came in and we would have exchanged money, whether you're coming from UK and you're traveling to traveling to Spain, from Netherlands, traveling to the United States, one way or another, you have exchanged money in your life, right? So foreign exchange is, foreign currency exchange in some sense. So it's all about changing money. Now, let me explain to you. Let me take you on this hypothetical holiday to Japan, right? So assuming like this over here is the dollar. Just let me see if you guys can see my mouse. Are you able to see my mouse? I'm just curious. Are you guys able to see my tiny little mouse? Yes, okay, that's great. I'll be using that a little bit, I guess. Yeah. Okay, so yeah, this is the US dollar and this is the yen, right? The currency of Japan, currency of Japan. So assuming, you know, before the holiday, before you went on holiday to Japan, 1 USD was equivalent to 100 yen. Right, 1 USD was equivalent to 100 yen, right? And so you exchange the money and you go on a holiday, right? You know, you go to Mount Fuji, you know, you have your share of sushi, sashimi, you know, fresh salmon sashimi, and you know, after you've had your nice meal there, and then you come back, you know, to US, right? You have a new president, and of course you have a new exchange rate now, right? Now your 1 USD can get you 110 yen, right? In this situation, did you make money or did you lose, right? You guys can put it in the comment section. Do you think you made money or you lost money? I'm seeing different answers. I'm seeing some people say we made money, some people say we lost money. Right? We got Veronica say we lost money. We got Mark saying that we lost money. Vincent said we made money. Right, guys, I want you to think through this process. You got to participate with me, right? Because that is really how you learn, right? That's really how you learn. You go through the thinking process and you really think, did I make money or did I lose money, right? I can see quite a number of you guys saying that you lost money, right? Because the trick is this, right? Let me see if I can pull out my handy dandy pen, right? You are in the US. Oh my goodness. You are in the United States, all right? And you're going to Japan over here. So from here, you moved over to here. Correct? Now, when you're in Japan, you're doing your shopping, everything, eating a sashimi, and then you decide to come back. What you do notice is that, yes, the 1 USD is now worth 110 yen. So what we can say for sure is that the USD has strengthened against the yen. All right, the USD has strengthened against the yen. Because now, previously 1 USD could only get us 100 yen. Now 1 USD can get us 110 yen. That means the USD strengthened. But we forgot we are coming from Japan and going back to US. Right, we're coming from Japan. We're coming back from Japan to the US, and what do we have in our pockets? Right, we have yen in our pockets, and we need to convert it back to USD. Right, we need to convert it back to USD, and because the USD is now stronger than the yen, we're not gonna get as good an exchange rate, you know, before we went to holiday. So in fact, we lost money, even though the USD has strengthened. Right, so that is the concept of Forex. Right, the concept of Forex, whether you are buying the USD or you are buying the yen, you are selling the USD or you're selling the yen. Right, I'm just going to pick a different color because I'm a little bit colorblind. I can't really see. Right, yeah. So and that is why we call it USD. You know, you guys might have seen this currency USD JPY, dollar yen. All right, whether we buy the dollar, sell the yen, or sell the dollar, buy the yen. You know, whether we're going this way or we are going this way. At the core of it, you know, it matters whether you buy whether you're holding the yen and changing it to USD or holding USD and changing it to yen. But at the core of it, what we want to do is to make money, and that is what Forex trading is about. You know, you're playing the fluctuations in currencies. Imagine right now, you know, if I told you this scenario, right? If I told you this scenario that on let's say today's the 26th of November, right? 26th of November, this was the exchange rate, and this would be the exchange rate on the 30th of November. Guys, if you have USD with you right now, are you going to buy more USD or are you going to buy more yen? Okay, are you going to buy more USD or are you going to buy more yen? Teddy, you're telling me you're going to buy more yen. It's a little bit, it's a little bit worrying. Most of you guys got it correct. You're going to buy more USD because the USD is going to strengthen in this case, right? We got Edball asking us to repeat the question. Basically, really simply, right? We know that at this point of time, 26th of November, 1 USD is equivalent to 100 yen, right? And I can tell you that I came from the future, and I can tell you that on the 30th of November, right, your 1 USD will be worth 110 yen, right? How many of you guys are going to buy USD? How many of you guys are going to buy the yen, right? So, yeah, usually what has happened over the course from here to here is that the USD has strengthened against the yen, right? So it'll be smarter for us, in a very, very simplified way of explaining this, is better for us to buy the currency that is going to strengthen, in this case against the yen. Now, of course, you have to factor in the holiday, when you're going for holiday, before or after holiday, stuff like this. But at the core of it, right, this is just one example. We have many different examples. We have the euro dollar, we have the Australian dollar, we have the Canadian dollar, we have so many different currencies, right? But at the core of it, this is what you need to know about foreign exchange, is that you're basically looking to bet one currency against the other, right? That's why we always look at it in the form of currency pairs, right? There's always one currency versus another currency, right? If I tell you that USD is going to strengthen, but I never tell you that it's going to strengthen against the yen, right? It will mean nothing, because USD can strengthen, right? USD can go up over here. It will only make sense if it went up, in this case, against the yen, right? Because if USD strengthen, and maybe if you were trading something like the Australian dollar, which also strengthened, right? Then both of them are strengthening at the same time. You would see, then it's a case of which one strengthened more and which one strengthened less. Okay. Now, anyway, let's move on to okay. Let me just see some of the questions coming through first. Let me see some of the questions coming through. How do you know when a currency will strengthen? So we have questions coming in like, when do you know a currency will strengthen against another one? So that will boil down to using what I'll be sharing with you a little bit about later, called technical analysis and fundamental analysis. There are ways to kind of analyze it, right? So maybe, for example, right, we can from a very simplified perspective, right, we know that a country's economy is going to strengthen. For example, China, right? China managed to tackle the COVID situation better than everyone else, right? And now the economy is open and it's buzzing. It's a buzzing economy. People are doing well in it, right? So we expect the currency to strengthen. Now, this is a very simplified explanation of it, of course. But what that means is that it doesn't matter so much on what it strengthens, but it needs to strengthen against a certain currency, right? So in this case, we look at the US, the United States, and they're not doing too well because Donald Trump, rather the COVID situation there is not managed that well, and hence the economy is not able to open up as quickly as China. So we expect the China to strengthen faster than in this case United States. So there's a currency that you can trade for in that case, USD, C, and H, right? So if we expect, in this case, if you expect the China yuan to strengthen and the USD to weaken, what will happen to this is that this entire currency pair of USD, C, and H will drop. So what we'll do is that in Forex, we would sell this, right? In this is not investment advice. This is more of like a very, 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 very simplified understanding
of how Forex kind of works, just using a little bit of so-called fundamental analysis applied to it. Okay, but now let's in the keeping an eye on the time, let's just move on from here and go to the next go to the next slide over here. How much leverage should I start with? Now, when you go to axi.com, right, you will see, one of the key things you can see is trade with a leverage of 500:1. Now, guys, how many of you guys have started trading? And may I know, just want to get a rough gauge of the people here. What leverage are you guys currently using on your accounts? All right, we got Dan saying that he's using a leverage of 100:1. Whoa, Narvin, you're using a leverage of 10:1. And Mr. Yup, I can see his leverage of 1:1. Narvin, I'm just curious. Oh, that's not bad. Mr. Yup, you're using a leverage of 1:1. Wow. Wow, okay. That's not bad actually. That's actually a leverage, right? I can see some people saying not sure which is the best leverage, right? I can see some people giving high leverage of 1:500. I can see one guy say 1:1,000, right? That is a little bit interesting. Some guys 1:888. In Chinese culture, 888 is a very lucky number. So that's probably one of the reasons why you get the kind of leverage. Now, but with XC, they have a very decent leverage of 1:500, right? Okay, we have Mukendi saying that my voice has suddenly changed. Can you guys, can I check with you guys if my voice is clear? Is my voice clear to you guys? Oh, everyone's saying my voice got heavier. Bit more deep. Okay, what I'm going to do, I am going to just plug in and plug up my mic again. Just give me a second, all right, guys? Can you guys hear me again? Can you guys hear me now? Am I still speaking like a robot? Oh, okay. Nice, nice. Cool. All right. Anytime I I start sounding like a robot again, just let me know. All right, and I'll just reboot my system. I'll reboot my sound card, right? Now, okay, all right, yes, Mr. Yap, it's no problem, right? It's low leverage is good, high leverage can be good. It's all a case of how you manage it, right? So guys, right? I'm going to show you an example over here. This is an XCMT4 account. Okay. Now imagine if I have if I'm taking a trade. Okay, imagine if I'm taking a trade, and of course, I need to find my pen, right? Imagine I'm taking a trade, right? And I just want to just let me shift my no auto scroll, just shift it a bit, just move it a bit to the side. All right, imagine I'm taking a trade from here. Okay, I'm taking a trade, I'm selling, right? Sorry, just let me do that again. I'm selling from here. I'm going to put my stop loss over here, right? This is the level where I get stopped out. And I'm going to put my take profit all the way down here. This is my take profit. This is my entry, right? This is my entry over here. My stop loss, my take profit, right? I'm expecting price to just say go all the way down to here. right? And maybe this, maybe this is a 100 pips, okay? Now, I'm going to take a lot size. I'm going to open a lot size of 1.00. Okay, I have one account with a leverage of 1:1, or rather 1:10, and I have another account with 1:500 when I take this trade. Okay, this is account A, this is account B. Which account is going to make me more money when I take this trade? Just you guys can guess, right? There's no harm guessing. I am seeing a very wise guy by the name of Dan. Now, guys, Dan said, isn't it the same? Right? And the truth is, it is the same. Whether you're using a leverage of 1:10 or using a leverage of 1:500, taking this trade here, selling from here and price dropping all the way down to here, whatever money you make from this trade is the same. Whether it is 1:10 or 1:500, it's the same, right? Because what you're looking at is you're looking at the lot size over here. So yes, it is a trick question. It's a trick question, right? So we have Yon Ve Mukendi saying, isn't high leverage equals high risk of losing money? No, that is not true, right? Because what high leverage does for you, right? What high leverage does for you is that it gives you the potential. The key word here is potential. It gives you the potential to earn more money, and it also gives you the potential to lose more money, right? So it only gives you the potential. All the trades that you take on your MT4 account are the same. Of course, the problem with a 1:10 kind of leverage, or maybe a 1:1 kind of leverage, is that it gives you less buying potential or less trading potential, right? So in this case here, right, we're just gonna let me see if I can show you. When you're trading, there's this thing called free margin. Okay, now so in this case, one lot over here, and we sell right now. Okay, we're gonna sell right now. Okay, this is a demo account. That's fine, mini heart attack over there, right? So when we sell, right, our profit, whether it's a little bit of profit, a little bit of losses, one key thing that we want to look at is over here, our margin level. Meaning that this trade has taken up an amount of our margin, $700 of margin, right? So we still have a big margin to play with. We have more than 7,000% to play with. Okay, so that is what leverage does. It increases increases this margin level, so you got more to play around with, right? So strictly speaking, leverage is actually a double-edged sword, right? So so I'm sure the compliance department will love me for saying this, but yeah, it gives you the potential to earn, but it also gives you the potential to lose a lot. Because for example here, maybe if you only have a 1:10 leverage, hypothetically, imagine you can only enter one trade. Okay, you enter one trade of one lot over here, and that is all. You used up all your margin. You're gone. Not so much you're gone, but you used up all your margin. You need to wait for the trade to be closed before you can take another trade. Now, with a leverage of 1:500, how many more times can you trade than a guy with 1:10 in his account? Can you guys take a quick guess while I read your questions? Matt, you're asking on the leverage I'm using for this account. If I'm not wrong, it's 1:500. Most of you guys got it, except Sydney. Sydney is not 500 times, it's 50 times, right? So you can see 1:500 is 50 times bigger than 1:10, right? So looking at your lot size over here of one lot, right? That means if account A can only have one times, he's only able to open one lot. This guy here, account B, he's able to open one lot times 50 times. Times 50 times. That means he gets to trade so much more. Now, that can be a good thing. And again, like I said, it can be a bad thing. All right. It's how you manage your risk, right? And that is an important thing. It's really how you manage your risk. And through the next series of webinars, as you guys join me, right, you will follow me as we kind of learn, right, how to get an edge over the market, get a higher probability setups, right, so that you can make full use of this potential that you have when it comes to trading. Okay, I got a question from Sandeep, right? Is it guaranteed that the stop loss? Let me see that again. Is it, if the market fluctuates too fast, is it guaranteed for the stop loss to be closed before margin is exhausted? We can't lose more than what the account has, right? So if you have $1,000, right, you're in your account, and the markets fluctuate like crazy, or there's a big crash, right? I believe for Axie, I need to confirm this, right? But you will not be able to lose more than what your account currently has, right? One thing I do want to see, you also risk owing 50 times more money, right? Mukendi, yes, and yes, I'm glad you got what I'm trying to say, and that is that you can earn 50 times more, you can lose 50 times more, right? When it comes to Forex trading, it's not like stocks, right? Rather, it's not like other forms of trading where you can only lose however much you put into your account, because before, the broker has a system in place that if you put $1,000 in your account and you're almost about to lose $1,000, what they'll do is they'll close out the position for you, because they don't want you to go into negative. Imagine you lose 5,000, end up you start owing the broker $4,000, right? That'd be terrible, right? So brokers automatically have a system in place that when your margin is too low, what happens is that you reach a margin call level, right? And once you reach a margin call level, they'll tell you that, hey, hey buddy, do you want to top up a little bit of funds? If you don't wish to, what they'll do is that they'll help you close off your positions so you don't run into like a negative balance. Okay. Now, you guys both know, all you guys know that leverage is a case of the potential you have, the buying and selling potential you have, and with that potential, you know what Spider-Man used to say, right? With great power comes great responsibility. It's the same thing here, how you use that power. You can use it for destruction, you can use it for, well, the opposite of destruction is not construction, but I mean, you can use it for good or you can use it for bad, right? So same thing here, with high leverage, it can be a good thing for you, and it also can be a bad thing for you. Okay. Now, if you are not confident of controlling your emotions when you trade, right, then it might be a better idea to start with slightly lower leverage, maybe 1:200, 1:300, 1:100, or some cases like 1:10, right? So it's built into the system already that you are not able to trade more than one lot in this case, in this hypothetical example, if you have an account A, because the leverage, you don't have enough margin to trade beyond this one lot. So imagine if you start getting emotional, you start getting excited, and you want to load up like 10 times more or 50 times more, because you have put in this leverage control mechanism, right? You will not be able to do that, right? And it kind of keeps you in check, right? So Mr. Yap, it is, yeah, there is logic behind having a lower leverage account. Okay, now let us erase this and move on to the next one. So yeah, basically this is how margin trading works. The higher your leverage, the higher your buying power. Okay, now some of the jargons that I think it's important that we know. At the same time, if you guys have any terms that you have came across before and you don't fully understand what it is, feel free to send it in the question section. Right? Feel free to send it in the question section, and I can do my best to answer them, assuming I know them. Because personally, I'm not a big fan of jargon. I think too much complex terms are being thrown around, and a lot of things can be explained a lot easier, right? So just to go through this slide as efficiently as possible. When we say we're bullish, it means that we're expecting price to go up. When we say we're bearish, we're expecting price to go down. So in a case like euro dollar or Apple is bullish, it means that we're expecting Apple to go up. When it comes to safe haven, it means that these are usually what we call safe haven currencies, safe haven instruments, and these are places where people run to, right? Imagine this is like a safe, well, kind of a better way of explaining it, but a safe haven for you to go to when things get scary. Right? So when COVID hit, right? When the news of COVID came around, it being spreading without a vaccine, what happened? Everyone got scared and everyone ran to instruments like gold, right? Because if all the economies collapse, right, or different countries collapse, right, one thing that will hold its value very well is gold, right? So gold is one of the examples of a safe haven asset that people run to. And when everyone starts running to gold, what happens? It increases in price, right? And then now that we have made good progress into some of the vaccines, right? And people are they're starting to be a little bit more daring, right? And we'll go into the whole concept of risk on and risk off later, but they start to have hope, right? They start to dare to take risk again. That's where people will run out of safe haven assets and it will drop in price. Okay, risk on and risk off, right? Simply put, right, these are some terms that people use when they feel that the market has a risk appetite or doesn't have a risk appetite. So imagine if you see some trader on the street, he's like, hey, how are you doing, right? So and then you all start exchanging your big jargon words together, right? Size each other up. Then he starts saying stuff like, hey, yeah, I think we're in a risk-off environment. And you're like, oh, shoots, what does risk-off means, right? It basically means, right, we are taking risk off the table. It means that, hey, let's take a step back and let's move away. Let's not be so risky, right? So you want to turn risk off, and this is risk on. So that means stuff like safe haven currencies will, basically, the value, will rise again because people are starting to be less risky. They're taking risk off, right? And there'll be a flight to safe haven currencies and assets. Same thing when risk on. One particular asset that tends to do very well when it comes to risk on is actually equities. The stock market, right? When there's a vaccine was found, the S&P, the Nasdaq, all of it, right? All the big stocks, they started to rally. They started to do very well. They started to rise, right? When people and this is an environment, risk on environment. So that's all you need to know about risk on and risk off. It means that whether we're feeling risky or we're not feeling risky. Bid and ask prices, and how it relates to spread is basically, let me see if I can put it out here. This part over here, right? So whenever you're trading, like in this case, we're trading, let's just say euro dollar, one of the most popular currencies, right? You can see that there is the bid price and the ask price. Now for euro dollar, let's see. If I were to buy euro dollar, would I be buying at the bid price or would I be buying at the ask price? You guys want to take a guess? Just answering your earlier question from Gerard. If you have a 1:1 leverage account, changing the lot size, does it change your leverage? Yes. The lot size affects your leverage. Your stop loss distance actually also affects your leverage. Now, okay, we have actually a mix of answers. Bid and ask, bid and ask. Naveen saying whichever is higher. And I can tell you for sure that 99.99% of the time, the ask price is always higher than the bid price. Okay, you will notice among everything here, right? The ask price, the ask price is always higher than the bid price. So when you want to buy something, right? When you want to buy something, you need to see like XC. XC is kind of like they're a broker. They're passing through the prices and they want to sell you something. If I were to sell you something, would I want to sell it to you at a higher price or a lower price if I want to make profit? Would I want to sell you at a higher price or a lower price? Can you guys make the guess? If I want to make profit, of course. But finally getting unanimous answers. High. Yes, you always buy. I would want to sell it to you at a higher price, right? So that means you want to buy from me, and me as a broker, XC, I want to sell from you. Of course, I cannot sell it to you at a loss. I can, the spread is almost like very small, like kind of profit margin kind of thing. But I will need to sell you at a higher price. So you will always buy at the higher price, so in this case, you want to buy something, you always buy at a higher price. You notice that the answer was here for you all along. You always buy at a higher price and you always sell at a lower price. Okay, so this over here is the bid. This is the bid, and this is the ask. Okay, you always buy at a higher price and sell at the lower price. Okay, yeah, so I think it's good that we we kind of get that out of the way, since there were a lot of differing responses to that. Oh goodness, time is flying, man. We're having fun. Liquidity. When someone says liquidity, right, it basically, all you need to know about liquidity means that how liquid a market is, right? That means how many participants are trading it. So Matt, the reason you're seeing XC's spread is actually, let me see, 111. Oh, it's because you're looking at classic account, right? You're not looking at their ECN account. Their ECN accounts. So to get a gauge of XC's spread, right, what we want to do here, if you go to xc.com, right, and you go into their, so I was using their standard account, so their euro dollar was about 1.3 pips, right? But their pro account, you can see that their spreads are 0.1, 0.2, which is pretty good, right? Sometimes it goes to 0. Once in a while, I see it goes to 0. But yeah, their spreads are really good for a broker, right? And this is coming from someone who has seen many different brokers in many different spreads. It's pretty good. It's pretty good, right? But whether you use a standard or pro account, right? We will go into that later, right? We'll go into that later, right? Because it doesn't mean that a lower spread is always good, right? A lower spread does not necessarily mean that it's good all the time, because you're paying a commission, right? Anyway, I'll touch on that later when we have a little bit of time, right? It's a spread linked to the amount of participants by Gerard, right? Yes, it is in some sense, because if there are less people trading it, right? Imagine, you want to sell something, right? At this point of time, you want to you buy a PlayStation 5. Assume you buy a PlayStation 5 from, brand new. You go to Best and you buy a PlayStation 5 for $500. Okay, let's draw it over here really quickly. And yes, this webinar is actually about 1 hour, so I'm just trying to keep it really quick. We have a PS5 over here, the nicest little thing over here, right? And it costs $500, right? You buy it brand new. You use it for you play it for 1 day, right? And you're like, oh man, I'm too old for games and I want to sell it in the secondhand market, right? And you want to, and you go and try to sell it on the secondhand market. It is one of the most popular things there out there right now. How much do you think you can fetch for it? You guys want to take a rough guess? You know, the price is right. Well, you got Dan saying that you can sell $600, right? But not sure, there'll be a recording that you can watch, right? So don't worry about that. We got people coming in at 300. We got people coming at 400. At 350 to 400. Most of you guys are in the region of about, you know, $400, honestly, right? Some even $600, right? Okay. Anyway, because there are a lot of people buying, you know, yeah, a lot of PS5 is one of the most popular things right now, right? Imagine you bought a PlayStation 1 at $500, right? And you're trying, you know, you bought this thing 5 years ago for maybe 10 years ago. You bought a PlayStation 1 for $500, and now you're trying to sell it off to the secondhand market. How much do you think you can get for it? You guys want to make a rough guess? I can see some people $30, $100, $50. You know, you might even need to pay some people to, you know, to take it off you, right? But most people are answering about $10 here, and it is true, right? There are less people who want to buy a PlayStation 1 right now. Yeah, some people say it's even $0, right? There are less people, so there are less participants. Less participants, you know, you get a lower price. So the difference between this and this is $490. The difference between this and this is $100. So this is almost like your spread, right? So same thing here, you know, there are more participants, there's more liquidity. More liquidity, you get better prices. If you are trading in a market where no one wants to go, like a PlayStation 1, you know, you're not gonna get very good very good liquidity. So I hope that kind of explain to you guys, you know, how the concept, right? The concept of liquidity. And slippage basically is how quickly price moves, right? So if price is moving in a very fast market, you know, this might go up and go down very fast. You know, 410, you know, when you're transacting, the prices change very frequently. But if you're in a less liquid market, you know, the markets are moving very slow, you'll probably get less slippage, right? Because the prices aren't going to change much over here. People are not going to try to, you know, change that much. But, you know, for PS5, a lot of people are, you know, the prices keep going up and down, up and down. So that's where slippage can happen, right? I don't want to spend too much time on that because I just need to move on because we're running out of time. Oh goodness, right? So okay, pips, right? You guys should know pips, right? It basically is the way you can count the number of the number of pips, when people are trading. Basically, we'll drill into that later. But when people say pips, they're talking about like in some cases, right? If you're talking about any currency, you're usually referring to the 4th decimal place, or if any currency pair with a slash JPY at the end, right? You're referring to the 2nd decimal place. Okay. Otherwise, when people say things are moving up 1 pip or going down 1 pip, you know, you're usually referring to a 4th decimal place. Long means you're going up. Short means you're going down. Hawkish and dovish are used more for central banks. Lot size, you guys should know lot size. So I'm going to go through this pretty quickly. So unless you know something is ready, you have a question on one of these, then you just let me know straight away. Otherwise, you know, I'll just touch on them really quickly. Major currency pair, minor currency pairs. Minor currency pairs are any currency pairs without the USD in them, right? So meaning if you go into XT.com, the XTs, this is a major currency pair. This is a major currency pair. Euro pound and Euro yen, although they are very popular and very liquid, right? They are not major currency pairs because they don't have the USD in them, right? So any currency pair that does not have the USD in them essentially is a minor currency pair. And when you're talking about emerging currency pairs, right? We're looking at stuff like the Aussie NOK, you know, those stuff that you don't see that often, right? And these currency pairs down here, you notice that their spreads are usually really, really high because they are less liquid, right? They are less liquid. Okay. Now, we have a request just focusing a little bit on the different time sessions, right? The Tokyo, London, and New York sessions. Okay, I explain really quickly, right? How is the Forex market open 24 hours a day, right? So the thing about the Forex market and why it's open 24 hours a day, just that not every single hour is the same. Just because the market is open doesn't mean that it is a great time to trade. What I mean by that is that if Sydney is open, right? Sydney tends to open at the start of the week, kind of earlier than everyone else, right? As you can see, this is where Sydney kind of opens, right? Of course, it's GMT plus 0. So during this period of time, right, it's towards the tail end of the New York session, and Sydney is just open. There's really usually pretty low liquidity. If you're looking for a lot of liquidity, there is a time where the Tokyo session, the London session, and the Tokyo and London session overlap, and that is one of the better trading times because a lot more of the world is awake at this point of time, right? You have Asia, you have Singapore, you got you got basically many other countries which are tend to be trading during this period. So you will tend to see a lot of market movement. When London wakes up, that's where a lot of stuff happens too. One of the best times to trade is what we call the US London overlap. This part over here. When London is going to sleep, right, and the US is waking up, this is the US London overlap, right? And this would usually be one of the best times to trade, right? So for Australians, right, if you're asking me when's the best time to trade, I would usually say towards the tail end of your day, right? Even though the market closes, doesn't mean you can't trade, right? So it's usually after you knock off work, right? Then you go home, in the evenings after you have your fish and chips. No, I'm kidding, stereotyping, right? But yeah, after you have your meals and stuff, you have your, I don't know if you guys are coffee fanatics, right? And you have a wine, have your wine. Then the evenings, right? There'll be a good time for you to catch the Tokyo London overlap, right? And that's where a fair amount of liquidity comes in. You can get to see a lot more movements in the market. Okay. Now, wow, time is flying. All right, time is flying, and I need to I need to make sure that we are covering fast enough. Okay. Next slide. How much time do I need to trade Forex? How much time do I need to trade Forex? So it kind of depends. I've classified it into 4 different types of traders. We have the scalper, the day trader, the swing trader, and the position trader. Okay, each one of them requires different time commitments, right? So just to get a gauge from you guys over here, right? How much time in a day do you guys have to trade? How many hours? Can you guys share it with me? And I can roughly tell you where might be a good place to consider. Okay, we got Matt saying that he has 1 hour to trade. Gerard, 4 hours. 1 hour, 2 hour. Ah, man, Manoj just 20 minutes. Now 1 hour would like to be full time. We all can work towards that. There's a way to work towards that with the correct guidance. And I can be very frank with you, right? When it comes to Forex trading, it's not only about learning, right? It's also about discretion, filtering. There are many Instagram traders out there, they talk about their flashy cars and stuff, but they'll never, those people are just selling you a dream. They're not selling you real knowledge. Right here at XC, what we're doing is we're really, later I'll be showing you the ebooks and stuff, but we're doing a crazy amount of work to ensure that you guys learn how to trade properly. So pay attention, right? I trade full time. And I run a firm that trades full time. Right? I can share with you how you can reach the goal of trading full time. But let me first warn you that it's not going to be easy, right? It's going to be fun, but it's not going to be easy. Okay, I have a lot of answers here. Most of them say 1 hour, some with less than 1 hour, but yeah, most of you guys maxed out at 4 hours. Sometimes throughout the day and sometimes not throughout the day. Now, if you have about 1 to 4 hours to trade, right, a good place for you to look at, right? Okay, if you have about if you have about 3 to 4 hours to trade, I say that you know, a scalper position, you can consider this, right? If you're a day trader, day traders usually, if you have less time in a day, I would say if you've got 1 to 2 hours, you can consider day trading. By the way, we're talking about minimum amount, okay? Roughly minimum amount, okay? So that doesn't mean that if you're a scalper, you cannot be a day trader, right? If you're a day trader, you cannot be a swing trader. That does not mean that. This is roughly the minimum amount of hours that you need, right? Swing traders, usually for people with about less than 1 hour to trade, right? So it kind of allows you to kind of look at the market, just get a few positions, and then you let it run for the next few days. And position traders, you know, if you have really little time to trade, right? Maybe you have you know, a couple of minutes a day, right? You just want to monitor the position over a long time, then you can be a, you know, position trading would suit you a little bit more, right? Charlene is asking, what is a good time to trade Forex, you know, to enter and exit? The truth is, there isn't a good time to trade Forex. There isn't an optimal time to trade Forex, because you only trade what the market gives you. For example, if we are in December, you know, we are approaching Christmas and the market is not moving. Everyone, you know, there's very, what we call low liquidity. Everyone's taking their breaks. Everyone is resting. The markets are not moving during Christmas. You know, there is, no matter how determined you are, and I can tell you that, oh, you know, the US London overlap is a really great time to trade. No matter how determined you are, it doesn't matter when the market doesn't move. So there's no best time to trade. Rather, you can only trade what the market gives you. Okay. And Jared, yeah, he said if you work full time, a lot of us work full time, and I think if you work full time, you can consider having a few strategies. One is more of a day trading strategy. You know, just a couple of 1 or 2 hours every night before you sleep, right? And maybe a swing trading strategy. You know, less than 1 hour for days that are slightly busier. You know, you can consider your swing trading strategy, right? Where you just put in the trade and you let it run. And you get to check it maybe in the morning before you head off to work, or you know, at night before you go to sleep, right? So depending on the time frame that you trade on, no, depending on the type of trader you are, you will look at different kinds of charts, right? So for a swing trader, they usually look at the H4 chart. They usually look at the D1 chart, right? For a day trader, they look at anything from M30, maybe up to even H4. Scalpers, you know, you don't usually look at anything from M5 to H1 charts, right? So it really depends. There is no optimum time frame. There's no optimum time frame to it. Rather, it's a it tends to work better depending on the amount of time you have. Okay. Now let's see. Should you follow the business news? So we got a question. Should you follow the business news like Bloomberg, Financial Times every day? No, I don't. What I do is I actually look out for this thing called Axie actually has. Let me see if I can find it for you guys here. Let me see if I can find it for you guys. Now I'll find it for you guys next time. But Axie has an economic calendar which you can follow. Yeah, I can't find it over here. The economic calendar. So basically, just let me economic calendar. Let me see if I can find it for you. Just give me a second. I think I found it. There you go. Yeah, this is the Axie economic calendar, which I tend to follow, right? And it just kind of shows me what are the key news events for today. So I just look at today, right? And I say, okay, you know, these are the ones that have passed. I'll just be looking at like, okay, you know, the orange ones means it is a there are big news events, but there's nothing in the red zone today. So just kind of watch it on and off a bit, just to know like, okay, what are we expecting tomorrow? Tomorrow still relatively, you know, it's okay. A lot of news events, but nothing really big, right? So we can see these are the high impact news events that I would watch out for when it comes to trading, right? For the rest of the week, you know, on Thursday and Friday, there isn't anything much left, right? But going back to your question, right?
I don't really follow the news that much. So depending on the type of trader you are, whether you're a technical or fundamental trader, you will look at different kinds of news. Okay. Let's see. Is there another option to MT4 for Mac users? I believe there is. MT4 Mac XE. Yes. If you are using a Mac, XE does have an MT4 for you to use if you're using a Mac, and you can use that, right? What did you start? Just what time did you start? We started about an hour ago, man. I can see almost everyone is still with us. I'm glad to see that everyone is still with us. Right. I'm going to take your question. Just keep shooting them across. Right. Now, fundamental versus technical analysis. Which is better, and which should you choose? Right. So there is none. There's none that I can say for with confidence which is better. You know, each one has a different kind of trading style. Now, when it comes to, I can roughly show you, right, that when it comes to trading, a blend of fundamental and technical analysis actually does help out a lot more. Oh wait, I just realized that there's a whole bunch of other questions that I missed out at the bottom. Right? Will you be able to organize webinars for technical analysis? It's really confusing. Yes, I will organize I think in the next few webinars we'll be touching on technical analysis, right? Price action, right? For me, I specialize in Fibonacci, support and resistance, right? So we will be touching on that, right? Today's webinars to kind of give you guys an idea of how just to kind of give you guys an idea of what Forex is, right? And then, of course, whether we choose fundamental or technical analysis, right? So when it comes to technical analysis, when it comes to, sorry, not technical analysis, fundamental analysis, broadly speaking, is like this, right? This is super, super broad, right? I mean, like I mentioned, you know, if China is doing very good now, you know, I expect its currency to strengthen, and a country which is not coping so well with, you know, with the recent COVID and stuff like that, economy is not doing very well, you know, we expect it to weaken. So very, very broadly speaking, this is kind of how fundamental analysis is like, right? Many things contribute to that, right? For example, right, all the different economic news events over here, all of them in one way or another, you know, this one measures, you know, the GDP of a certain country, right? The German, no, this is retail sales, you know, Italy, UK, all of it in one way or another, you know, it measures different aspects of a country. All of that to kind of decide if it's doing good or it's doing bad. If it's doing good, it strengthens. If it's doing bad, it weakens. So that is broadly speaking the concept of fundamental analysis, right? How we execute it is a lot trickier, and we'll be covering that, you know, maybe in future webinars. You guys gotta let me know if you guys want to cover it, right? But technical analysis is also an area which I specialize in, and that is where you use all the different, you know, that's where you use the charts. That is where an XEMT4, you know, for this example like this is a moving average, right? This is a support and resistance indicator, which you built. You know, you can toggle the strength of, see which levels are strong, right? We can toggle the different time frames. You know, we can even add in the higher time frames, the even higher time frames, the lower time frames, right? So this is an example of technical analysis, right? So this support and resistance indicator, right? We're actually giving it out for free in the next few webinars. So be sure to tune in to those webinars, right? Because you get some of the really awesome indicators that we're building, right? And all of this really goes into technical analysis, right? It's the same thing like over here when we look at RSI. So what is technical analysis like, right? Let me just show you an example, and you can take a guess from here. Okay, at this level over here, the RSI hit this level, it dropped, and price dropped. This level over here, you know, the second time it did that, you know, RSI dropped and price dropped. The third time, there was a big reversal from here, you know, price also dropped from there, right? Now, if the RSI comes up to this level again, what do you think is going to happen? Do you want to take a guess? Do you want to guess if price will be going up or will price go down? Do you guys want to take a guess? Okay, we're getting some answers in. A majority of you guys are saying that it will go down, right? And be careful when you're using the word "it will," because you never ever say it will. You always say it might. Okay, when it comes to trading, guys, always be very careful. It's not whether it will or not; it's whether it might go down. Because when you say it will, right, it means that you are overconfident, right, and that might affect the way you trade. So if I say 3 out of 1, 2, 3, 3 out of 3 times price managed to touch this RSI level and drop. So the next time RSI levels over here, we're expecting it to drop. We could expect price to drop, right? So that is the probability. So we're expecting that 4 out of 4 times, or maybe it might drop, right? But that is all probability, right? When it comes to technical analysis, it's all a game of probability, right? You will never say that something will go up or will go down, right? So there is like the support resistance indicator, like I showed you over here, RSI, stochastic, right? All special tools that we'll be giving out over the course of this webinar series. There's a moving average over here. There are stuff like Fibonacci when you use, in this case, right? There are many ways to do technical analysis, and we'll be covering on that a little bit more. Okay, no worries, Bismarck. We'll catch up later. Be sure to tune into the other webinars, right? But I'll be ending this webinar pretty soon, right? But showing you that when it comes to trading, when it comes to trading, there's both fundamental and technical analysis. Okay, right? And I do want to show you that what I was showing you earlier. This thing is the XCMT4 account. If you don't have one yet, guys, maybe for the sake of this this presentation, it'll be easier for you just to go to xe.com, right? So just go to your website, type in xe.com. This has to be one of the nicest domain names I've ever seen. 3 letters, right? axi.com. Go to xe.com, you click try a free demo, right? When you click try a free demo, right, fill in your details, and you will receive an account just for you to play around with. Right. Now, when it comes to trading, let me share with you a very important insight over here. Whether you open a live account or you open a demo account, which one should you do? Okay, my take is that you should open a demo account to make your mistakes. Make your mistakes when it comes to the platform. Okay, yes, Vincent, they do, right? And make your mistakes when it comes to a platform. Because when it comes to trading, right, especially a live account, it is much more effective to trade $100 live account, right, versus $100,000 demo account. You will learn a lot more trading $100 live account than $100,000 demo account, because you will feel you feel the psychological difference, you feel the greed factor, you have fear of loss, you get a lot of things that you cannot learn in a demo account. So download a demo account just to try. But when it comes to trading, right, open, it's better just to practice with a small live account than a big demo account. Okay, guys? Now, that's just a really important insight for you guys to know. Now, XCMT format does not work on the new Macs. That is very interesting, Mukandi. I'll take a look at that. I'll get back to you guys on that. And one thing I want you guys to do, Jared, I don't think they reset it after 30 days, right? And you can also request, just in case, that to ensure that they don't reset your demo account after 30 days. I wrote these 2 books over here. Okay, I'll very proudly say that I wrote these 2 books, Guide to Forex Trading, and the other one, which is the Guide to MT4. Let me tell you, first and foremost, that it is the most comprehensive guide you ever see. Now you can see the guide to MT4. It's a super duper in-depth guide, right? Sharing with you everything you need to know, including the tips and tricks that I use myself, right? Yeah, that's me. Yeah, I'm the author, right? And I just share a lot about how to fully utilize MT4. And I encourage you to go and download it so that you get a better idea on how it works. Okay, and of course, when you download it, you will also be able to get some of the really cool indicators I showed you just now, right? But first and foremost, what I want you to do now is to go to axi.com. Let me just paste this in the. Oh, how do I paste this? Oh, sorry. Yep. Let me just paste this in the chat. I'm not sure if you guys can see it. I think I pasted there. Can you guys see? Can I share the link? Are you guys able to see the link now? Yeah, that's the link. Go there and download my awesome ebook. Okay, there is Guide to Forex, Guide to MT4. We'll be releasing the Guide to Indicators, and see, there's a bonus free support and resistance indicator. Price action playbook, we now have a very cool price action indicator, and my ultimate trade manager. What's the ultimate trade manager? It's my awesome trade manager that I show you over here. It's a very easy to take your trades. You click buy. You can move your entry anywhere you want, maybe down here. Move your stop loss anywhere you want, maybe below this level. Your take profit anywhere you want, maybe here. Do I want partial profit? Nope, nope, nope. I can cancel the rest if I don't want. How much do I want to risk on this trade? Maybe I want to risk 1% of my account. And there I go, place a trade. And I am now risking exactly 1% of my account. All right, so yeah, all of this will be given to you guys free in collaboration with Axi, right? Just that you need to start the ebook series. If not, you won't be able to reach ebook number 3 and 4 and 5. Okay, Mark, if you cannot see the link, right, there is a place to go, right? There is a place you need to go, and I think it's this. I just pasted it in the chat, so that is, just type in the URL if you need to type it in, right? It's Axi Learn to Trade Forex Basics. Okay, yeah, just download it from there. Sorry guys, I just sent you guys another link. It's important that you use the latest link that I sent you. I might have made a mistake sending a previous link, so I might not be able to track. So I just sent you guys another link, right? It doesn't have the INT over there. So so yeah, please go to that one instead. It's probably it might be better. Okay, guys. So I've overrun the webinar quite a bit, right? It's nice to see that I say 99% of you guys have stayed all the way with me. I'm really glad to hear. I'm really glad to see that. Now, for the next 3 weeks, right, we'll be having more webinars, right, and I'll be covering with you price action, how to use MT4 indicators, trade management, and of course, as you can see, I'll be taking a lot of your questions along the way. So be sure to tune in for the next few webinars. Please get your friends, those guys who always wanted to trade but have never kind of learned to trade before, and do me a quick favor, right? From no one can see this except you guys, of course, and me, right? From could you give just so that we can review it later, can you just give a rating from 1 to 5, 1 being lousy and 5 being good, how you felt today's webinar went, right? Don't worry, if you have to rate 1, I won't come and hunt you down. No, I can't promise that. But yeah, just leave 1 to 5, and maybe just share with me one way, one thing you like about this webinar, and one way I can improve, right? And that will help me a lot, right? Yeah, that helped me a lot in ensuring that next week's webinar, when I meet you guys again, I do it in a way that you guys will enjoy. Right? Yeah, that will help me a lot, guys. Oh, cool. Man, you guys are so nice. Yeah. You guys are so nice. Thank you very much.
One guy Darwin gave me 10 upon 10. That's double the points I wanted. So that's great. Peter, you're asking when will I be touching a candlestick? I believe it'll be 2 weeks from now, right? So it follows the series. So next week I'll be talking about indicators. Right? I'll be drilling in on the different kind of indicators that you can combine to trade. After that, I'll talk about price action, which is on candlesticks, right? Then after that, we'll talk about putting our own little trading strategy to understand, together, right? You guys, I know Ruben, yes, a little bit rushed to the end. Sorry, it's the first time that we're trying out this session, and I seem to have kind of lost track of time a bit. But I'm glad to see that you guys are still with me. Thank you so much for your feedback. Yeah, I know it's a 1.5 hour webinar and you guys stayed with me through it all. You guys are awesome, man. All right, so that's it from me, guys. Thank you very much. I'll catch you guys next week. Stay safe, in whichever country you guys are, right? I hope to see you guys next week. Remember to download the ebook. So, as we go along this webinar series, right, we'll be able to go through the ebooks together, especially if you've got questions on them. And yeah, man, it's gonna be an awesome next 30 days, right? And I look forward to really building a nice friendship with you guys. And maybe towards the end, I'll share with you guys the Instagram, my Instagram and my cat's Instagram. Right? or you can just search on it online. It's not too tough. Take care, guys, and see you and peace out. Bye bye.